First of all, thank you all. I'm delighted to be here and be a part of what's happening here today. A couple of things I'd like to add. Arnie had made the suggestion that you want to bring Silicon Valley here. I would suggest that you don't. I think one of the great privileges we have in markets like Tampa and also in Little Rock is that the cities and towns and states that people have been flying over for a lot of years are suddenly becoming very relevant. And as I have the opportunity to work with early stage companies as you do, and having built 12 companies on my own, transacted a few, lost one or two along the way. That was my MBA, about $18 million in 1999. We know how most things ended up that started in 1999 that were dot-coms. But the point I make is that there's really never been a better time. And in these environments like Tampa, Little Rock, et cetera, it's a great place to start these companies because we can get more runway. We have a community like this also in Little Rock that's highly engaged in terms of helping these companies succeed. We have corporations who are learning how to innovate, and I'll talk to you about that today in terms of what we're doing with FIS. But there really has never been a better time, and we should be very proud that we have the opportunity to be in places like Tampa and Little Rock to attract these early stage companies and make them successful. So one of the first things I want to start with is, why Little Rock? So most people don't know that, I should have asked this as a question, how many people know? You know the answer now, right? Where FinTech began, well, it actually started in Little Rock in 1968 with a company called Systematics, who began producing core software for banks. Systematics became FIS, which is located here in Jacksonville, Florida. FIS today is a $9 billion company, serves 53% of the world's banks for their core technology, has about 650 products, about 53,000 employees. We work directly with them. They are a large contributor and a big stakeholder in our program. The Venture Center is a not-for-profit. We've generated, we're about 3 years old, we've generated quite a bit in terms of revenue and quite a few jobs for the state. The state also contributes aggressively to our program, contributing about $500,000. So FIS and the state of Arkansas and our community are really the ones who contribute to making this program successful. The startups have generated actually closer to about $50 million now in terms of private equity. I should update that. Close to about 600 jobs, about $20 million in revenue. So we're excited to be a part of that and the example that we show. One of the things I want to talk about just in the beginning is, and I think it's important to sort of set the stage for FinTech. I'm not very good at making slides. My assistant's a lot better. But I found this cartoon, and I thought this was sort of right because I think if you wind the clock back a year or two, the FinTechs were perceived as the grim reaper to large financial institutions. Disintermediation is going to happen. Banks aren't going to be needed anymore. All these sort of things are going to occur. And in fact, to some extent, that has happened. But I think really what we see now is collaboration, right? And we've learned this on many fronts. It's not so much, let's not try to beat them, let's join them. It's let's work with them because they really understand our customers probably better than we do. One of the fascinating things I found in working with large financial institutions is the fact that they actually think they own the relationship with their customer. And you know what? They really don't. And when you're sitting there and you're talking to the guy who is sitting at his desk and the portrait of his grandfather is behind him in a large community institution, the way in which he developed relationships was on the golf course, a good scotch, and a big thick cigar. And that's not necessarily the way the millennials want to work today, and that's obviously one of the groups that they're pursuing. So I think things have changed. Collaboration is important, but I also think, too, we have a long way to go. It's very difficult to sell inside of these institutions. I say it all the time, and we all know this, particularly as a startup organization, and the startups that are here today, nothing happens until you sell something. We used to say back in 1999, if the dog doesn't eat the dog food, you don't have anything, right? We actually started businesses then without customers. We had ideas. We had no products. We didn't really know where we were going to market. Today, through lean methodologies and the approaches that we take, we try to validate that very early. But most importantly, we have to sell our products. So the banks and these financial institutions have to create what I like to call as a frictionless lane for innovation to occur. And you see some of them doing that. You see the Citibanks, you see the Barclays, you see the Cap Ones that are creating these great innovation programs or opportunities for innovation to occur, as I like to say, within these institutions, and good things are happening. Also, regulatory challenges. 2008 really changed the world, and it changed the way in which we can work within those financial institutions. Unfortunately, there's some regulations that are changing. But one of the first things we try to do with our program, because one of the first questions banks want to know is, how are you overcoming and managing the regulatory issues? Understanding of demographics, right? Everybody wants the millennials. What about me? I'm a boomer, right? and I've got some money. We have what's called the silver tsunami that's occurring in this country right now, which is the largest transfer of wealth that's ever occurred. Those are my parents and ourselves that are making that change occur. So what if I want to invest and take my 401k? What about those sorts of applications? What if I want to buy my kids a house? What if I want to look at taxes and stocks? And by God, there's Bitcoin and blockchain to deal with as well, right? So we have those things. Legacy systems, slow for adoption. Leveraging existing data. Banks have amazing amounts of data. And you know, I can tell an awful lot about you from the transactions that you make, and I don't even need to know who you are. I just need your credit card number. I need to know where and when you were. And I can tell you that you're an influencer at Starbucks every Tuesday morning at 8 o'clock. So there's quite remarkable things that are going on out there. Conservative thinking and leadership. I think we talked about that a little bit, about the guy sitting at his desk. But more importantly, we got a long way to go. So I think what we're doing in Little Rock is a better model. And I like it, and it's why I'm there. I was a guy who grew up in Pittsburgh, spent most of my life in D.C., moved to Delaware when my wife retired, and played a lot of tennis for a year and figured out what am I doing next, and I decided to go help with these accelerators and these innovation programs because I don't think big companies really have a good idea on how to do this. So this is what we're doing with FIS. You know, we look at some key areas, obviously things like artificial intelligence, core banking, right? Blockchain is obviously a consideration, mobile, payments, analytics, and wealth. All these areas are very important. And we're getting this data from the people at FIS and directly from the customers at the banks in whom they're working with, from their line of business leaders. So we're sourcing our information about what's keeping these bankers and people in the financial institutions awake at night and helping them find solutions for those problems. We make a small bet on these companies. We bring 10 companies in. I'll show you a little bit about that process. We make small bets of about $75,000 per company. We have 10 in each cohort. We're just starting our third cohort, and again, I'll speak a little bit more to that. There's three things that we do really well. I like to say it's connections, it's content, and it's capital. And without those three things, I don't think you can be real successful as an early-stage FinTech company today. Great mentors, much like you all. How many of you are mentors to the TIE program in this room, for example? Put up your hands, please. That's great. I mean, you know, you guys make a difference. One of the reasons that I do the work that I do and I love it so much is because I've had such great mentorship in my career and feel somewhat of an obligation to pay that back and pay it forward. We have a world-class curriculum that we try to tailor and make relevant to the companies as they come in based on the gaps that they demonstrate to us. I'm not interested in a cookbook, right? I'm interested to say that we have an individual coming in who has issues with pricing, with regulatory, and find the support and curriculum to support those concerns. Lastly, it's actually close to 200 banks are actually involved in our program over the 12 weeks, right? And I'll show you a little bit more how that works. We get them some cloud credits too with AWS. This slide's a little bit repetitive, but what's important about it is that FIS is the size company that they are. They have 6 innovation centers around the globe. We are the only place in Little Rock, Arkansas where they're dealing with early stage companies. And again, it is very difficult for large companies to deal at this level of granularity, and we're giving them that insight. This is a kind of a picture of the program, and the reason I give you this is that I think what happens often with accelerators is that we tend to look at these 12-week boot camps as the beginning and end of the program, right? It takes 12 months to put on this program. We spend over 100 days doing due diligence, and we're in that process right now to look at over 300 applications that came in from 49 countries and 29 states. I'm down to 17. Can't tell you who they are yet, but there's some pretty remarkable things, and we also get to see the future a little bit in terms of what's going on there. But you know, we've learned in this part of the process that we get out of this exactly what we put into it. And we have the line of business people who are coming in from the FIS core lines of business participating in this process. And we did this without them. We were making these choices without them initially and said, hey, here's some cool companies, why don't you look at these? What we've learned is that it doesn't work. It doesn't work as well. So I like to call it sort of the adopt the puppy program, right? So I've got these line of business leaders. I said, look, we're going to adopt this puppy together, this early stage company. I'm going to make sure you don't kill it over the 12 weeks, and we'll work aggressively to try to move this forward. But with their buy-in, they're bought into the innovation, they see the application of the product, they understand the customer's concerns, ideas, and so forth, and we get just a much different level of trajectory through the company and through acceptance, and I think that can be seen through our results, and I think this year we're going to do even better. Like I said, we start with about 300. We are not looking at solutions that disintermediate banks. Obviously, that would be inconsistent with some of our stakeholders. We are looking for those that are enabling to banks. when we look at these guys, we look at a number of things. You know, there's a lot of horses out there, right? We got to find the right jockeys. And that's about the team and the leadership. And that makes so much difference. And if you talk to sophisticated VCs, and I know we have many of them in the room today, a mediocre idea and a great team is a lot more interesting than a great idea and a mediocre team. And I think that's, their capacity to pivot, those sorts of things are very important. We look at the product maturity where they are, and it's important in these large companies to make people understand that the solutions that they are looking at are not fully baked. In fact, half the time they're only half-baked, right? But they're looking for stuff that's GA. They expect it to be shrink-wrapped and pull it off the shelf in large companies because that's what they have patience to do. The other thing, too, is they're not necessarily incented from a compensation perspective to effectively work with these sort of early-stage companies. So it's important to get them thinking about the fact that not only is this an opportunity to create a product or a service for their organization, but the financial institutions and the large corporations have an opportunity to shape these solutions. And to me, that's neat, and I think that's cool and really fun. So you have to get that across. Like I said, we get their core team involved in the selection, and then we put 10 to work. The weeks are thematic, and I think it's important. We try to stack these in such a fashion that they support each other. The first 2 weeks, I don't let them talk to banks. I'll bring 40 banks in, and when we do this, there is magic that happens. We sit in our conference room in Little Rock. We have a wonderful facility in the tech park there. I encourage you all to come and see what we do. We're happy to share. But we sit down with the C-level executives of these banks, and these are large financial institutions which are tens of millions to hundreds of billions. I get CEOs, CIOs, CMOs, CTOs, CISOs, and we get them in an environment where they can talk about what's keeping them up at night. The teams go ahead, the cohort gives their 1-minute pitch, their elevator pitch, and then we have a little lunch, and in the afternoon, these bank executives get to go one-on-one with these companies that they want to talk with further. And I can tell you that in a non-sales environment, even though it really is, right, the opportunities and the magic that occurs there is remarkable, and it's great for both sides because they don't get a chance to see this stuff, right, as they're innovating as banks. And these early-stage companies, they get an opportunity to validate their product and solution to 40 banks at the C level, and they get to do that over 10 weeks. And I don't know that they could do that over the course of 2 years. And if they spent the $75,000 we gave them, they could make that happen. So it is a remarkable process, and I think what makes us quite successful. Like I said, I don't bring them in for the first 2 weeks because I call that finishing school. We're going to get their hair done, get their nails done, make them look pretty, and make sure they know how to talk. These are sophisticated companies, though, too, so I don't want to make them sound like they're, I don't want to say high school students because they're ahead here today. But certainly from the standpoint of not being mature. And then we try to also align the curriculum with the subject matter experts and make sure that it progresses and builds for them. And when we conclude on demo day, I lean heavily into business development. I lean heavily into culture. I lean heavily into sales. Those are the biggest gaps that we see with these early stage companies, right? Nobody sells anything, nothing happens, right? So that's part of that. Quick example of some of the banks that we had here: Fifth Third, USAA, hundreds of billions of dollars in terms of revenue. Obviously some great folks locally. Bear State, I guess that does say Bear State, but I guess that sometimes the PowerPoint doesn't come through correctly. Was a great executive partner last year. We have not chosen an executive partner this year. It will likely be Arvest, which is Walmart's bank. They have a fairly big role in Arkansas, as you guys know. But this was great to have him. I talked about this a little bit, that the banks would never have access to this sort of opportunity to work with these early stage companies if we didn't create that opportunity for them in that environment. And what's so great is the ones that were there last year are calling now because they want to be a part of it this year. So when people come back the second time, it's like good food, right? You know you've done something right. These are our portfolio companies. I'm happy to share with you directly, but not on here, but some really cool stuff. Just talk about a couple of them. Omnitrium. Does anybody know what PrizeLink Savings is? Anybody from the UK? So in the UK, they have what's called premium bonds. So for every dollar, right, you'll love this, right? For every dollar that I put into the bank, I get a lottery ticket. So imagine if you could play the lottery ticket, but you never lost your base. How many of you would play Mega Millions the last few weeks? If you gave 20 bucks and you never had to give 20 bucks, or you kept your $20. So for every dollar I put into the bank, right, I get a lottery ticket. So some of us may remember toasters, right? And the bank would give us a toaster. So today this is sort of like, this is like high-tech toasters, right? So Rosemary started this company. 28 states have adopted this. This is a law, and the banks are being very slow to adopt this. But we talk about serving the underbanked, et cetera. So if I put $50 in the bank, depending on the frequency by which they want to do the drawings, right, I get 50 tickets, whether it's weekly, monthly, quarterly, and there is a prize associated with this. It's a marketing play for a bank, right? Works great. But I never lose my 50 bucks. The next time it comes up, I get my 50 bucks to play again, right? Now, who wouldn't want to participate in that, right? Banks being slow to adopt this, I think it's an extraordinary idea. Alpha rank. So I told you earlier about this idea that your transactions ends up much like Facebook data, right? So Eric is doing what Facebook won't do, which is give you data in terms of how transactions demonstrate influencers. This has been used in the pharmaceutical industry and also in the telecommunications industry, but they can't share it with us. If we look at the pharmaceutical industry, they learned about 10 years ago that if they could figure out which percentage of the doctors use their products first, that they influenced 60% of the market. So I could figure out who those 6 to 8 or 10% were. I could influence 60% of the market, so I could target my marketing dollars much more effectively and not have to, why market to everybody when I can market to 10% and get 60% of the market, right? So Eric's doing that using transaction data from banks. Great stuff. But we can talk more about these things. Explainer is a RegTech. I think RegTech is interesting. I think we're going to see regulation technology where regulators are going to be able to walk into financial institutions, push a button, and genuinely get the information that they need just like that. And that's just a matter of time in machine learning and so forth. Lastly, just a little bit on our results. You know, it's all about effort, right? But the results are what matter. Hexonic and Fundseeder both have signed formal agreements with FIS, and these are reseller distribution deals with the world's largest provider of banking core services. I think that's pretty remarkable in 2 years. ABA endorsed Akuba's lending solution for small to medium-sized banks. We've had 18 of 20 portfolio companies raise follow-on capital. Now that's 20, that's 18 out of 20. In my experience, that's an outlier, and I think extraordinary results. We hope for 1 or 2 or 3 per program, if at best. FlutterWave just did a $10 million Series A. We're excited for those guys. Hexonica actually is probably about to close a $5 million as well. In the 18 months, we're probably closer to about $33 million in capital raised. Bond.ai, which is a voice platform for banking. We talked a little bit about banking earlier and where that's going. And you know, 2 things there. We're no longer developing products, we're developing platforms, right? So let's go back to the iPhone and apps, right? So let's go to Alexa and skills. So this is really what you're going to start to see more and more. We talk about managing finances, we talk about, you know, helping the unbanked. I've got a 6-year-old grandson. Not only will he not drive a car, he will not drive his bank account. We will have autonomous banking as much as we will have autonomous driving. And that's good and it's bad, but he will put his money in the bank, his bills will get paid, his credit will be assessed. These things will occur in a fashion that's really quite foreign to most of us, but I can tell you it is not far away. And Alexa will help us with a lot of that. Lastly, AlphaRank, if you get a chance, look at Finovate's Best of Show in his presentation there. He's an extraordinary presenter. If you're an early stage entrepreneur who's pitching, you should see what he's doing just to learn from that. And that's pretty much it. So thank you. Hope that's helpful.